All right. Hi, everybody. Thank you very much for joining us at our webinar, Automated Credit Decisioning Efficiency Meets Accuracy. We're really excited to have you here today. We think it's going to be a really great session, and we're excited to get started. So I'm just going to go ahead and introduce our two speakers, and then we can go from there. So we have got Mark Lobb from Creditsafe with us today, as well as Chris Mortensen from Kirby Corporation. So Mark is our product director for North America for Creditsafe. He is our expert on business credit data. He's got expertise in financial data integration, the evolution of business needs. He focuses on really innovative solutions that are going to enhance business credit reporting and enhance that risk management. And from the Kirby Corporation side, we've got Chris Mortensen, who is the corporate credit manager. He's got over 30 years of experience in B2B finance. He's got expertise in domestic and international operations, and he's served as a leader that drives operational efficiencies, and he's very experienced with transforming financial operations with large-scale organizations. So we're really thrilled to have them both with us here today, and it's going to be a great conversation, I think. So we can just get started now.
Thanks, Maggie. Appreciate the intro. Always want to live up to the intro is always a tough thing.
Absolutely.
No
Thank you.
pressure.
So I think, Chris, you're a Creditsafe customer. And I guess we want to talk a little bit about maybe to kind of set the stage a little bit as like what problems that you had a little bit at Kirby Corporation and figured out what process you went through first to identify the problems and then see what kind of solution you ended up putting in place to solve those. So
Sure. Yeah. And, problem might be the wrong word. Not that it's incorrect, but I look at it as managing our business. And is there a better way to manage our business? And we're in the business of controlling risk. And in the last 2 years, we've been highly focused, my team and I, on looking at ways to, observe our process as it stands and what ways can we improve that in terms of managing our risk, supporting our clients better, and doing it in an efficient way that is meaningful for the company. I'm a big believer in looking at automating as much as we can to scale the operation. Our company has been in a growth mode since I've been here in the last 2 years, and it's one of my focuses to position my team to be successful, manage the risk, and scale as the company grows. So the challenge we had when I first got here was really managing a very large portfolio of clients. We have over 15,000 active clients in our ERP, supporting a multitude of companies that we own. And along with our constant inbound of new applications, I think legacy approach, we really focus on the new accounts, reviewing the credit, making good judgment calls. And then really from there, historically, managing our existing portfolio in a kind of a reactive way. If a customer develops a slow pay process, we might then adjust our credit terms. Or if we get a notice for bankruptcy, something extreme like that, then we react to it. And what we really wanted to do was become more proactive in seeking out a way that's both pragmatic and efficient in reviewing our existing portfolio on a regular basis to ensure that that we're again managing our risk.
well, that makes sense. Yeah, it seems like it's a common story I hear a lot from Creditsafe customers when they first kind of come on board. Is right there. Everybody has a process for new customers, and they do due diligence at the onset. But it's something that we've seen regularly, especially monitoring our customers' usage, and we can see through some integrations what the behavior that is happening. A lot of customers, they'll do a great job doing the due diligence at the beginning. That customer could be a customer for 1 year, 2 year, 3 years, and little by little, that customer's profile can deteriorate for any number of given reasons. We see the bad debt ends up tending to come typically from ongoing customer relationships, where you might have a good relationship with them, but due to any sort of pressure going on elsewhere, you might not realize what is going on with that business, that industry, what kind of pressures they might be under. So I think that's a good point, really interesting. Also makes sense that you would be focusing on those new applications, given the volume of customers you have. I think, trying to manually review 15,000 customers on a regular basis, that quarterly, yearly, whatever that may be, that's a huge undertaking to do that manually. So I'm curious. Maybe Maggie, I guess you can go to the next slide.
I was
But
going to
I'm
say that leads us
curious.
very nicely along. That's great.
Yeah, we see kind of, exactly what we're talking about here, right? We did some surveying, right? But most customers, you say only 14% of them have, 75% or more paying on time. So the write-offs are always typically from longstanding relationships. I'm curious to see, how much more confidence you have in your portfolio now than you did previously, and kind of how this process was kind of shared internally at your company. How did you get buy-in from different stakeholders and things like that?
Sure, sure. So, kind of going beyond the journey I described a few minutes ago, I think what we determined is really evaluating the tools we had at the time that I came on board 2 years ago, and interviewing a lot of other vendors who provide products there are a lot of similar products, but it seems like everyone that goes to market, whether it's a dashboard feature or a credit underwriting report such as Creditsafe. Everyone kind of has their niche. Our portfolio, and every credit manager out there probably has unique needs, and so my needs wouldn't necessarily match someone else's needs. And I think our success stories may not fit every company's situation, but in our case, we have extreme customers in terms of exposure. So we do business with customers that buy items from us at $1 million at a clip, and I have other customers that do $200 and $300 repair bills, and so we have big and small, and we were starving for a report that kind of provides us with a risk analysis on various size customers, and that was really what the gap we were experiencing, and ultimately partnering with your company, we felt like after comparing different products, it was a good fit. And we also made other tool changes. And ultimately, what we were able to do is kind of match the best of all worlds that fit our needs. In terms of the sell to upper management, it was pretty easy because I think everyone recognized that what we had in a legacy approach wasn't necessarily working, fitting the needs, and we were pretty easy to justify and support a change. So I did have to document pros and cons and costs. Of course, costs are an important part of the process, but we were able to, negotiate with our new partners and put together ultimately a tool for my credit and collection team that made sense and put us in the best position to be successful. And that's what we've done.
That's great. I'm curious that typically, if you were to do this type of manual review that you've mostly automated, um, what kind of time does that typically take at a company like Kirby?
That's a good question. I can kind of give you the answer too, because what we did in our first decision tree with your company is we did filter through all of our customer base, and there were a number of accounts that were identified as manual review. So we ended up reviewing them manually. And so we had a dedicated team of one FTE and then three others that were part-time pouring through these accounts. And some are quick reviews, but other items, it could take a lot of time. And hard for me to define, but I can tell you this: the manual project, after we ran the customer base through the decision tree in April, May of 24, we didn't get through all the manual reviews until September of 24. So it was a 4 or 5 month journey to get through everything, and ultimately either make the decision that the resources we had and the intel that we had on the clients supported going on with the credit terms that were established. And then there were, in the hundreds accounts that we identified that didn't support continuing with the credit terms. So it was a lot of manpower to achieve that result.
Sounds like it, right? So it sounds like roughly 6 months to go through those manual reviews. I guess that, the other impact of that immediately kind of pops into my mind. We talk about that kind of timeline is just merely like what happens to those businesses during that time period as well, right? Especially with everything going on in the world today, you never know how somebody can be impacted by, a new policy change or, whatever's going on geopolitically. So that's it's definitely a long leeway. So your process now, then, are you reviewing all of these on a monthly basis, on a yearly basis, or how does that typically work for you?
Yeah, so we're combining our dashboard vendor along with your product and a secondary credit reporting product, and we are going to automate that. It should have been rolled out already, but we had a few nuances with our ERP that we had to make some changes so that it worked properly. And we're about a month or two out from getting that completed. And once it's done, we will take 1/12 of our existing portfolio and we'll do a 1 month review on those accounts. And then we'll repeat that cycle in an alpha sort every month over a course of 12 months. So at the end of the year, we have touched every account and re-reviewed our risk profile on every client that's active in our system. That's the go
Well,
forward project.
certainly sounds a lot safer and more efficient than currently previously happened. Um,
Yeah,
I
we
think.
actually we designed a dashboard to allow our analysts to properly like manage that process. Last year when we first engaged with Creditsafe, we did it manually. I mean, y'all did it, but we didn't have the dashboard component. So it was all done in a spreadsheet, which, it worked. But what we're doing future state is within our dashboard system, it's drawing the Creditsafe data automatically and giving us a dashboard approach so that the loose ends, the we can actually go in the dashboard and identify the number of accounts that have been approved, and then the ones that are referred to manual, we can break those down in several different ways, prioritize the follow-up, and it helps ensure my analysts by the end of the month will be through that cycle. So it's future state. It's going to be a process that we're going to be able to manage the overall risk analysis in a timely manner. So we're really excited about it.
Yeah, that sounds good. It sounds like you can really kind of just pick out the outliers really quickly through your dashboard and say, oh, this is what we
Mhm.
should be looking at. That could be risky for us, things like that. Um, so that's
I'm gonna
quite
move you guys
interesting.
along. I hate to be the award show music here, but I'll
Yeah, so okay, so this is like a quick kind of breakdown of some companies, different trees, and how they could be set up, right? Just from the tool. So if we look at this page, right, it's just this very simple kind of decision tree, whether or not the company is active. If it is not active, in this case here, you would automatically decline credit, right? So this is the tool that we're talking about today, checking the side where you can set up automated decisions. For example, the second row here, right, if the risk score is less than or equal to 60, automatically decline this. And then the DBT is the days beyond terms, which is a very important metric for a lot of people. If it's over 14, equal to or over 14, then automatically decline it as well. One of the common kind of objections that I've seen companies kind of bring up when we talk about this type of tool is that they don't want to automate every decision, which I think is an interesting point that you kind of brought up. I think you touched on a few times, right? You still have a significant portion of these that are for manual review, right? Um, Maybe can you talk without getting into specifics about your own tree, right? Maybe talk
Sure.
about how you decided, what portion you would want to keep in manual review and things like that.
Yeah. And decline's kind of a strong word. All that really means is if we're not hitting one of four KPIs, very basic KPIs, then it's going to be referred for manual review. And then we're doing the old school, take a look at it. And when we're taking a look at an account, what we do primarily is we're going to review the credit report in detail. And we have a secondary company that we may look at their credit report in detail. But beyond that, I'm a big proponent that we look at our experience with the clients. So um, it, I think sometimes with these credit reports, it's not necessarily negative. It might be limited information. And if we've had a long-standing relationship with the client and they've always paid us, in good standing, then that's the next biggest variable that we're going to have with the client. Now, you might have situations when we did the last manual review process, you have a series of accounts that we just haven't had activity with for a number of years. And those are the ones you really got to eyeball because you've got, you've got a decision tree telling you to be cautious, and you have had no recent experience with the client, and those are the ones that we'll dig in a little deeper and make sure we're making the right decisions.
Yeah, that makes sense. Um, what's in the next slide here? Yeah, so I guess one of the key benefits of speeding up time, as we talked about, are you using it for regular review? We can use it for first time reviews as well. Chris, are you only utilizing one decision tree at the moment for all your customers?
We have two, actually. We look at small value applications and existing accounts. Let's say a credit limit of $4,000. We won't do as involved review, but if it's over a certain threshold, we'll do a more detailed review and a different thresholds to be more cautious, if you will. But beyond that, I'd also say I think number one, or maybe the top two in my mind, is number one, you're doing more due diligence and you're being more thorough when you automate the process because you're capturing everything. And number two, I really firmly believe we're being more consistent and we're being more accurate in our decision making. And the neat thing about it is over time, you can monitor your write-offs, right? So if you have trends that go up, maybe you go back to your decision tree and you ratchet it down a little bit. So there's a lot of flexibility once you design this process.
Yeah, that makes sense. I think we have a lot of customers now on this product, and depending on how the type of business that they're running, they might have one decision tree for their entire portfolio. And we have a number of companies that might have 4, 5, or 6 different decision trees, right? Depending on the cost that it costs for them to build a given product if they're shipping it. Or maybe they also have like a SaaS model where their incremental cost to ship something is really, really low. So they might have different types of decisions for that. But what are the types of input that you request from your team to put in to get a decision? Is it just something like they're putting in a requested credit limit, or are you letting kind of them decide a little bit more on that?
For a new account, yeah, we've actually automated a link for the credit application, which will have all that detail in there in terms of what the client's asking for. And then that kind of dictates one tree over the other. And similar process with existing client base.
Okay, so you're splitting them up based on how big the accounts are, and then whether or not it's
Yeah.
an existing account.
Yes, our exposure. Yeah, 100%.
Okay, interesting. Cool. How long did it take for you to kind of decide how to build this decision tree? What are the key items that you wanted to put together? You don't need to speak to specifics about your tree, of course, but
Yeah,
just generally how you
so
discovered that.
yeah, I mean, we stare at your reports all the time and you kind of gravitate, you have your favorite things where you make a decision. And more times than not, in our experience, again, our product, our customer mix, it may differ with other companies, but for us, most of them are pretty much slam dunks. I mean, the report's vibrant with data and it's very positive, and it gives a recommended score that typically far exceeds what we're even looking at. Those are easy decisions. So we made our tree very simple and looked at those same parameters. Because we knew in the background that on the small number that we go to refer, we can take a more thorough look and then read the whole report over and typically go to a secondary report to get a second opinion.
That sounds good. I guess touch on something you mentioned maybe like 2, 3, 4, 5 minutes ago. And I think is a really key portion of what I think long term is going to bring value to anybody that's using this tool is being able to look back over the course of a year or 2 years and see these are all decisions that I automatically approve the decline, and see how have a full audit trail of everything that happened there, how it impacted your business, and being able to very granularly maybe tweak your roles in the future. Um, can you maybe touch on your outlook on doing that in the future on a regular basis? Or
Yeah, it's really one of the reasons we engage in this journey as well, is that we wanted to be consistent and we wanted to be accurate and we wanted to manage our risk. And when you're doing it manually, hodgepodge, Joe's doing Monday, Frank's doing Tuesday, Helen's doing Wednesday, it's I think people are well intended and we're doing a great job. But when you start getting these accounts hitting the bad debt list or not non-performers, it's hard to look back and really see on a consistent basis where we may be missing opportunities to catch some of these risks, high risk accounts or even medium risk accounts. And I think with this process, because it's so consistent, it's putting me in a position as the credit manager to go back and make these adjustments when we see where we're missing opportunities up front to identify a problem down the road. So that's one of our focuses for sure. And we know that it's just like the economy. The economy varies. The product mix we sell and the different industries we sell are going to evolve over time. And so you've got to constantly keep that in mind with how you're reviewing and underwriting your new accounts as well as your existing accounts to make sure that, again, we're managing our risk appropriately.
That makes sense. I'm curious about one thing, and I don't know how things are necessarily at Kirby, but just kind of put myself in the shoes of what I would expect as pushback here is, the whole concept of maybe an auto decline, right? If you're looking at a record and very high risk score, very high DBT as well, so they're paying their bills really late, might be a whole bunch of suits on it, and automatically declining that without necessarily manual review. What kind of pushback did you have maybe with your sales team or that type of group? Is that something that came up at all in that type of process?
Yeah, it has. It has, and in our environment, and it could again vary with other companies. We're pretty transparent with our operations and sales teams. Sometimes when I want to talk through a delicate conversation, I'll take it to the manager or the director's level within sales. But yeah, we're pretty transparent when we're seeing something from a credit report, and when it's negative and sales is aggressive to pursue this client, we'll probably get two opinions, obviously, and that's why we have two resources. But I will have that conversation. I'll be brutally honest what we're seeing, and then it's never no. I mean, we might build a structure a way where we get a bigger deposit, or we take a security interest, or we get a guarantee. There's always that next level of ways to secure a transaction, but it's hard to go with conventional credit terms if it's clear cut that it's too much of a risk for the company to take. So we do have other avenues to help us make a deal happen.
Right, that makes sense. You're not saying no to the revenue, right? We're saying, well, let's find a way to make it work.
Yeah.
If that's higher deposit or different terms or what have you.
Yeah, we even have credit insurance. There's different options we have to make things happen. But sometimes your customer facing sales level, they don't, that kind of conversation needs to take place typically at the management level, and that's what we do. And we've found creative ways to make things work for sure.
Cool, that's great. I appreciate that. I think that's a common pushback I get as well, right? And
Oh
maybe
yeah.
also specifically in less mature organizations where um, people don't have the right processes or the right relationships. Right? If somebody's new on the credit side there, they might not feel like they have the confidence to go ahead and have those types of conversations. I think just arming them with true data, right? Saying this is what I am seeing, just being completely honest, I think tends to really bring that to the next level a lot of the different times.
Yeah, I'm a big proponent. Like my team, they're very customer facing. We have to have professional relationships with our clients, and we're all salespeople, quite honestly. We have to represent our company well, and we have to find creative ways for this company to be successful. So, and we all play that role. Some of our core responsibilities are a little different, but we're all in it to win.
Yeah, in the end, you're on the same team. You all want the revenue, right? You just don't want the bad debt either. That makes sense.
Yeah, job security.
Yeah, that's exactly. Um, uh, on that note, I think Maggie, you've got like a little, unless there's something else you
Yeah.
wanted to say first, Chris. Anything else you kind of wanted to highlight before we move on to the next part?
Was that a question for me?
Yeah, if there was anything else you wanted to highlight as
Oh,
part of
sure. I'm
this.
sorry. I heard Maggie, so I thought you were talking to her. I think we discussed everything throughout. I'll just say that I have peers in the industry and in fact, I have one I'm very close with at a company in Chicago that's going through an a dashboard transition right now as well. And the journey can be painful. It took a lot of there's some key team members that spent more time on the transition than doing their core responsibilities, but the payoff's huge. And you know, it's not uncommon for a transformation like this to take, you know, we're at about a year and a half now, and we're just about ready to roll it out. And we're doing other automation as well that's going to continue that's going to benefit my various teams. But I think that's the biggest thing is that you're going to make a change. Make sure you think everything through initially, because the journey is going to be time consuming, but the payoff is huge. And it puts you and your team in a position to be successful. And in our case, scale as this company grows, we're going to be in a position to support it.
Thanks, Chris. I appreciate that. Yeah. Mag, should we bring up that little video there? We'll walk through it a little bit.
Absolutely. Yeah. Sounds good. So yeah, Mark is going to walk through a demo of Check and Decide. And I'll just say before we do that, I think we're running a bit tight on time in terms of questions. So if anyone does have any questions, if you could drop them in the chat, that would be fantastic. And we'll get in touch with you separately to make sure that those questions are answered. If you watch the demo and can't resist wanting to go in and have a play around with Check and Decide as well, obviously you can message that in the chat as well, and we'll schedule that sorted out for you. And yeah, okay, you go ahead.
So this is
Mark.
a quick demo of Check and Decide, and I think Chris has fully integrated into a dashboard. So a little bit high tech, and that's why it takes a little bit longer for him to do it. But essentially, when you're using the Creditsafe portal and you've got the tool set up, you can simply click on that run decision that we just saw. And then it'll bring up some general Creditsafe information. If you have multiple models, you can choose them right here. This one is simply called monthly assessment policy, and somebody is requesting a credit credit limit of 10,000. Right, so they simply just from the tool click the request decision button. This pulls back the Creditsafe information that's part of that decision tree that's set up. It stamps essentially as an audit trail right below the decision and the key factors that were taken into account in making that decision. So you can see here that it was declined, and the reason is because the DBT listed there, as you can see in red, failed what is listed in the decision tree that has been set up. So what we want to show next as part of this is how quickly and how easily a tree can be modified based on results that somebody is seeing that they might not want to see in the future. So we just clicked on the configuration on the left for Check and Decide. We'll click View Configuration, and we saw that the DBT was the reason, right? And then that Creditsafe score, that DBT was 6. You can see here that DBT as set up on the configuration says must be less than or equal to 5, or it fails. So we just click on the Edit Configuration button if we want to change that. And I believe in this case here, we're going to change that to 14 or 15, right? So that in the future, we want to actually approve it as long as that is 15 or below, right? So must be less than or equal to 15. If that fails, then it will change to, in this case, it looks like we change it to refer in the future instead of automatically declining, right? There's a few other data elements here that are being used as part of the decision tree as well. But you can use any data element in the Creditsafe reports that you like. Okay. Here, what we're going to do as well is instead of just accept, refer, and decline, we're going to modify the language there a little bit to something that's a little bit relevant to this use case, which is a monthly assessment, just to be a little bit more descriptive. So monthly assessment passed, monthly assessment, I believe it says needs manual review. Requires review. Yep. And then the last one, monthly assessment, because it failed. Yeah, there you go. Right. And then we'll go ahead and save that. And then we can, from here, go back and directly run that same decision tree again, just as we previously did. Right. We'll find that Creditsafe report, pull that up. We'll click on the run decision again. Right. So now we're running the same tree, but with a very different configuration, or slightly different configuration, really. We'll put in that same dollar amount that we had previously. We'll request a decision, and then we'll get a new decision with a new description as well, monthly assessment passed, right? Because that DBT is 6 and the new rule says 15 or higher, right? And then what we're going to do from here is go back and show, I think, a key element that's similar to what we were talking about with Chris earlier, right? It's just being able to see all the decisions historically that have happened. So we'll go into that decision history on the left on the button in the Creditsafe portal, choose the tree that we want to look at, which is the monthly assessment policy. We're going to search decision ranges, pull them back up, and then you can see all the decisions that were made historically. And there's a nice little export button that can be listed there. So you can export that to an Excel or a CSV file and get a history of everything that's happening. Now, what we just walked through is essentially the check and decide tool within the web interface that we sell as a SaaS product. But you can also integrate that into any ERP platform that you like, right? All of this is available directly through our API. And we also have some kind of pre-built connectors and integrations with companies like Salesforce, which are closer to plug and play if you don't want to build it out yourself. Now's a good time to put your questions in the chat, and we will try to get back to you. Right?
Yeah, that was great. Thank you very much, Mark, for that, and thank you so much, Chris, for joining us. And thank you, everybody who is who's come to watch. And I think this was great. If there's anything, again, that if anyone had any questions or wants to take a look at Check and Decide in a bit more detail, yeah, please do get in touch and we'll sort that out. We'll also have the recording of this webinar up on our website tomorrow, and that'll get emailed out to all of you attending. So if there's anything that you missed or want to take a second look at, you'll be able to do that. But other than that, I think we've done it, guys. So thanks very much, everybody, and thank you again, Chris, for joining us. And
Thanks for having me.
everyone have a great rest of your day.
Thanks so much, Chris.
Thank you, guys. See ya.